Welcome, Nathan. Thank you so much for joining us today.
Thanks for having me, Michael.
Yeah.
Glad to be here.
Thank you. I think it might be helpful for the crowd, maybe to set the stage. You've been an entrepreneur before. You've also been a domain name investor. So maybe give a little bit of a background around what you do at Infinite and today where you're looking in the market.
Yeah, absolutely. So I started out my crypto career back in 2013. I got deeply into Bitcoin, very excited about the ecosystem and the idea of decentralizing money. And from there, ended up building a firm called Infinite Capital. So we've been investing in the crypto space for over 7 years now. Went very heavy into Ethereum back in 2015, 16. And since then, we've been early investors in a lot of top DeFi projects, a lot of the largest protocols. Before the crypto space, actually, as Michael mentioned, I was an entrepreneur in the Web 2 space. I started a company called Code Wars. We had a community for software developers where we helped train and allowed engineers to compete on challenges. And that was actually the first time I got into domain names. So I bought domain names for myself before, but that was the first time I was really playing with the secondary market, really from a business entrepreneurial standpoint. So we ended up buying codewars.com for the business. Likewise, for Infinite, we bought infinite.xyz. So I've played around in that space and accumulated hundreds of domains, largely from a speculative portion for our own building and our own efforts internally. So since then, Infinite Capital, we've got a number of funds we manage both across liquid crypto space, so we're very involved on the open market hedge dynamics side. Then we also do a lot of venture investments as well, such as D3.
Very cool. And maybe for the crowd, what are some of the domain names that you own today that may want to fractionalize on Doma?
Yeah, it's a great question. I've got a few really interesting AI ones, ones that maybe aren't the largest potential audience, but I think would work really well for an interesting project. I recently picked one up called Reticulate.ai. I think it could be a really interesting framework, which is another space in the AI world that's doing quite well. But my favorite one for sure is Infinite.
And you guys have also invested in NFTs, right? Non-fungible tokens back during the whole bull rush of the last cycle. What are some of the projects that you were involved with back then and today?
Yeah, absolutely. So the NFT space and the standard that came out of NFTs was pretty fascinating, right? Up to that point, we had ERC20s, we had tokens, we had Bitcoin into ETH, into how can you, in a way, create this equity-like token structure on the blockchain. With ERC 721, with NFTs generally, this idea of non-fungibility became pretty fascinating, right? Like you look at the largest asset class in the world, from real estate to cars, et cetera, and they follow that same dynamic. So we've become one of the largest holders in a number of different NFT projects. Things like Azuki, which create PFPs and are more focused on the entertainment space. A lot of different GameFi projects out there that also have tried to create digital metaverse-style relationships to real estate. And in that digital real estate, very similar to domains, you can own them as NFTs, and they have finite supplies and different use cases to them.
So I think it's important maybe for the audience, since you are an investor, right, and there's so many overlaps between what we're doing with trying to bring domains on chain and with your experience in buying and selling NFTs, crypto is often referred to as a high-stakes gamble, right? So what are some of the things that you evaluate when you're looking at an on-chain NFT or an on-chain project? What makes you decide to roll the dice, in the context
absolutely.
of being in Vegas?
So I used to play a lot of poker too, and interestingly, poker has an enormous amount of corollaries to how you invest. I've even found my own best qualities and worst qualities in the poker game translate into venture investing, right? You can learn a lot about your style. Where do you overinvest? Where do you chase, opportunities that are too much of a long bet, and where are the value bets? What's EV positive? So generally, the way we look at crypto is very similar to the way we look at typical venture as well. A lot of it has to do with the quality of the team, the quality of the project. Is there fundamental value here at play? But then the craziness with crypto that you also get is because so many of these assets are very speculative, you start to quickly disconnect from fundamentals. And we've seen that in an insane way in the last 6 months with the meme coin cycle, right? You now have assets literally that are trading on attention. And that doesn't mean that they don't have value per se, but it has value in a different way, right? You have to create a new fundamental mechanism for how you think about that. So meme coin specifically, it's what is the attention cycle? Where is there more ever increasing curve of attention, and when does that peak, and when is it time to get out? And so when we look at crypto investments, when we're looking at projects to both venture invest in and on the open market, we're typically looking back to kind of the foundations of that token. What happens? How does it work? Is the supply really well done? Is there a strong founding team behind it? And are they building a product that is going to create real value for the ecosystem?
And you've also traded domain names in the past, right? Do you feel like the behaviors that domain investors exhibit resemble at all today's state of the crypto economy, or even 4 years ago during the Ethereum bull run?
Yeah, absolutely. And that's part of what got me so excited about D3 is from being involved heavily in the NFT space and having bought thousands of them over the last couple of years, and we're still actively buying and selling them as well now. What you've seen is that crypto and crypto rails, and this is the early thematic we were very excited about, is how do you decentralize finance, right? So you look at DeFi, decentralized finance, it's all about on-chain trading economies. So how do you create an exchange that's fully on-chain? How do you create lending markets that are fully on-chain? And with those, you have really interesting liquidity dynamics that don't exist in a lot of other markets, right? You look at classic cars, it's a very slow, obtuse market. And domains are very similar too, right? There's a phenomenal amount of value there. There's a lot of speculators. There's a lot of people that are buying for fundamental value cases and selling those to real profit. But because of the way the mechanics work right now, that liquidity cycle is slowed down a lot, right? Typically, you've got to work with an intermediary to know that there's a safe transfer. Crypto gets rid of all of that. And that's the beauty of the crypto layer, is that it allows liquidity to get unlocked in a very, very fast pace. And so in the NFT markets, the interesting thing we've seen over the last 2 years is there's a lot of people that have come in and found that they can quit their day job and become market makers for these NFTs, where they're literally just buying discounts on specific NFT collections and rare traits inside those NFT collections, and then flipping them back to the market, and within a few days or a week, making a 10, 20, sometimes 50% profit margin. And I think what's very fascinating there is you bring all those liquidity dynamics of how quickly NFTs are overturning in crypto exchanges like OpenSea, like Blur, et cetera, and you start to add NFT domains into that, you now can bring an enormous amount of liquidity to that ecosystem that could honestly 10 to 50x the volumes we're already seeing and create a lot of profit opportunities in there as well.
Really cool. And maybe diversification is very key, right? Risk management. So even when you guys or back in the day when you traded domain names, like how did you manage your risk? How do you diversify owning various baskets of NFTs or domain names?
Yeah, it's something we think a lot about in crypto. I think, my first advice to anybody thinking about getting in the ecosystem is avoid gambler's ruin, right? The number one name of the game is don't crash out. And that's an easy thing to do in crypto where leverage and finance and volatility are so high. And so internally, the way we manage our funds and our portfolios, we think a lot about diversification risk in the sense of, one, where's the market going in the short term? Two, what narratives could or could not do well? But then also, three, not over diversifying as well. Like our particular brand of investing is we're very high conviction. So like when we do really believe in something, when we're taking a stake in a company or a project or a token that we are high conviction on, we will also very heavily invest in it. So we tread this line of being willing to go to like safety and like admit our losses when we're wrong. But then also I think some of the biggest wins, and you look at this across funds, VCs, et cetera, come from when you're very allocated and very exposed to one particular asset that you have extremely high conviction on.
Very cool. And we're also seeing companies themselves now literally sell ownership in the form of NFTs, right? Literally on the open market. Have you been involved with any of those projects, or how did you evaluate acquiring that despite maybe the risk associated with securitization and whatnot?
Yeah, absolutely. So I mean, what we're also seeing within the NFT space is starting to get used in so many different ways. For example, there was a project recently, Infinex, founded by a founder that we invested in quite early on in the DeFi space. And they did the entire fundraise for their sale as an NFT, right? So it was via this NFT model that then becomes a way to flip potentially into a token, theoretically. And the interesting thing there is that NFTs unlock a lot of opportunities, right? There's a lot of interesting ways that the standard's still so early that you have so much innovation happening within it. And so on the security side, in terms of regulation, like that's a much longer conversation, but really up to the founders. And also we are living now in a security and regulatory regime that's a lot more friendly.
And how much did that project raise from that NFT sale?
I think they were well over 60 mil.
60 million?
Yeah.
So you think we can do that with domains much easier and within guidelines, right? Because domains have fundamental utility. It's not,
Absolutely. I think the interesting thing there, like another corollary is like, so you look back to the NFT space, and one of the projects that really put NFTs on the map is called CryptoPunks. So if anybody's heard of CryptoPunks, they're like the original PFP. They became kind of a cult symbol of status within the crypto space. Like, okay, great, you made a lot of money in crypto. Now you want to show people via Twitter, which is where most people actually interact on X, that you are an early participant in this ecosystem, this community. And it ended up creating this 10,000 collection of these like pixel art profile pictures, and there was a whole different rarity level to them. So you have 10 of them that are called alien punks that are extremely expensive. And at one point during the bull market back in 21, 22, these were selling for $500,000 each. And the most expensive one was one of the most expensive NFT sales, sold for 25 mil at the top of the market. And this also, the crazy thing here to think about is that this was done without any intermediaries. It was done entirely on chain. A lot of these transactions were happening between completely untrusted parties where you don't know the counterparty, but purely because it's on crypto rails and that trust layer is enforced, can happen very, very quickly. And I think there's a very big corollary to that in the domain world where you can see a lot of the most interesting domains start to trade in a very interesting way, and you get much better price discovery and much better pricing discovery mechanics, but also you introduce a whole new level of speculation because you have liquidity on the back end, right? In the domain world, if you're going to put $10 million into domain, you want to know that, one, there's either very real business behind it that's willing to eat that cost, or that there's some sort of speculative upside. And I think when you add crypto into it, I wouldn't be surprised if you could see some of the most expensive domains sell on crypto rails because of the market dynamics.
What are some of the dynamics that you see with projects that launch digital assets on chain and want to incentivize long-term ownership, right? So for example, earlier today we demonstrated, Richard came on and talked about hockey.com and how he wanted to fractionalize that, for example, get more stakeholders, build a business out of that. Do you see parallels in the crypto space right now where there are projects that launch NFTs, for example, or a digital token and incentivize ownership? Like, what are some of the mechanisms that you've seen in the space?
Yeah, absolutely. I think one of the big interesting things that's net new with crypto, tokens, NFTs included, is this community dynamic, right? You don't see that in equity markets per se. Equities are much more focused on the fundamentals. What are the Ps? What are the future cash flows, dividends, et cetera? And instead what's happening in the crypto space, and you've seen this a lot with memes as well, is you get this cult status where people want to be part of something, and they want to be part of something as a group and as a community. And that ends up translating into financial value for the underlying asset of access, right? And that's really part of why CryptoPunks did so well is people wanted to have a CryptoPunk. They wanted to be part of the CryptoPunks community and show that off to other members. And so on the more fundamental side, there are so many different token mechanics that actually can create long-term value alignment between the token holders and the company itself. So even now, there's a lot of projects like, for example, there's all of these staking mechanisms that come into play, both for NFTs and also for tokens, where the tokens or the NFTs that you buy get staked with the company into a pool that's somewhat profitable. So there could be a real yield that's coming from an exchange that you've started, and now if that company is throwing off $10 million a year, or a month rather, in terms of cash flow, that could be paying back to the token holders, to the NFT holders, and you can see corollaries there to potential within the domain market of if you fractionalize a domain like that and then also have a rent component attached to it, now there's a real fundamental value for why that fractional asset should trade at a certain price.
What does the distribution of investors in the crypto space look like? Are they very institutional? Are they all retail? Do they differ by geography? Do you have any of that data?
I don't have the high level statistics. It changes very quickly, but like touch and feel, there's a large component of the crypto ecosystem that are crypto natives, right? So people that have been in the crypto ecosystem for a long time, running venture funds, they're at these like middle tier pools of capital before you reach the institutional stage that are investing in a lot of venture projects. You have a very large component of retail as well, and that fluctuates with market cycle, right? And that goes back to like, you look at the macro, are we in a bull market? Are we in a bear market? Retail interest and participation always goes up as obviously the price is following that. During bear markets, and that's why during bear markets we find the best value in terms of investing is one, not only are prices depressed, but that's also where the real builders are still there. Now what we're seeing with the Bitcoin ETFs and a lot of these new products is that institutions really are starting to move in size, right? Even countries on the nation state level. You look at Nayib Bukele in El Salvador, they have a Bitcoin reserve they've put together and they're sitting on well over, I think, 100% profit from that on hundreds of millions of dollars. So it's starting to really turn into an asset class that goes all the way from nation states down to retail participants.
Interesting. We talked a lot about risk so far. What is the most contrarian bet that you've made in Web3 or even Web2, to be honest?
That's a good question. I guess there's also a follow-up, ones that have been successful and ones that haven't. But I would say there's two ones that I'll focus on, one on the early side and one on the late side. So back in 2017, even earlier than that, like 2013, 2014, people are always talking about this idea of Bitcoin as money. And so what really initially got me excited about Bitcoin was the idea that you could decentralize an asset that is purely digital, right? Up until that point, we'd only really seen value destruction with the internet, right? You look at the music space, you look at what Napster did. You brought the price of certain goods down to essentially free, right? Because it was effortless to create more of them. And for the first time, Bitcoin kind of flipped that on its head. Now we had a value accrual mechanism due to the scarcity that the Bitcoin protocol enforces. And so one of my early very contrarian bets there was that Bitcoin wasn't money. I never saw the use case for you buying a coffee with Bitcoin because at the end of the day, the beauty of money is that it's stable, right? The best money in the world, fiat that's successful, holds a very close peg, right? Like you don't want hyperinflation both ways. You don't want it to crash and you also don't want to make a lot of money off it. And so we were very early to the stablecoin narrative. We believed in the idea that fiat or the equivalent of it should and would exist on crypto rails, and those stablecoins have proven to become one of the biggest asset classes in the space. So very early on, MakerDAO was one of the first decentralized stablecoins out there. Frax, when we saw Sam's talk earlier, was also another in the same venue. And we were buying MakerDAO in early 2017, and since then followed into a lot of stablecoin investments that have done very, very well for us. And even now, you can see with USDC, USDT, they become some of the biggest asset classes on the space because of the fundamental value they provide. Even as crypto investors, where we want to be exposed to volatility, there's times where we want to take off, right? And that comes back to hedging risk. Like, you need a safe place to be able to put that without having to exit the crypto ecosystem altogether.
Very cool. And as you know, domain investors in this category of real-world assets, we also see other projects in the space like IONET, right, creating networks of GPUs on-chain. What have you seen as the biggest challenges for some of those projects trying to gain institutional adoption? Or are they very easy, right? Is it really just expanding access to retail without going through the friction of, you know, creating the whole infrastructure and the app layer?
Yeah, absolutely. So we were early investors in Akash Network. They also another early participant in the GPU network as a service model, so like DPIN category, decentralized physical infrastructure. I think that particular category, institutional investors really understand. It kind of makes sense to them. And one of the interesting things of what that entire GPU as a service model has done is furthered the concept of decentralized AI. So we call it DAI, the idea that everything you look at in terms of the recent really large wins in AI, OpenAI, Anthropic, et cetera, have been very centralized models, right? Getting access to NVIDIA H100s is a very difficult thing to be able to buy in bulk. Like, it's an extremely competitive market. So to be able to open those up in a way that any developer, any interested enthusiast can access enough training power to actually start a small project off of is really, really compelling, and also a very healthy thing for the space. Yeah.
Since you brought up AI, I do have to ask you, like, do you have views on AI agents combined with blockchain? Do you think that is the next catalyst for growth? And you know, internally, we have the view that all AI agents should have a domain name, right? So it is a net benefit to our industry as well.
Absolutely. So I think the agent space is phenomenally interesting. We're extremely invested in the AI category at large. I think that what's happening with crypto and the overlap with AI is a very interesting experiment of what happens when you take the intelligence of an AI model and combine it with financial power, right? Now you give that actual capital to make decisions, to act autonomously, and we're just at the early cusp in our opinion of seeing what kind of evolution comes out of that. So that agentic economy, I think there's going to be a lot of opportunity in, and also a lot of interesting experiments that really push AI forward in terms of the value that it can create for end users. And I think there is kind of an outcome there at the back end where you also start to really fundamentally play with the ideas of identity, ideas of autonomy, and that's where things like, domain overlap become really interesting.
So with the new agentic workflows, how do you think potentially domains will be used on chain as more interoperable identities? Do you have a view on that, or do you feel like people just want to go back to the fundamentals?
Yeah, it's a great question. I think, so identity has been something that the crypto space has been working on for a long time. Early projects like Civic and a lot of people that were trying to correlate real in-world identities with your Web3 crypto presence. And what we've seen is that identity on the crypto world has actually gone in this very like pseudo-anonymous way, right? A lot of the biggest crypto influencer personalities, no one actually knows who they are. They go by a moniker, it's their handle that matters. And that's where I think you start to see a lot of overlaps of identity actually evolving. Identity is no longer about, do you have a specific ID attached to your birth certificate? Identity instead becomes related to your on-chain history, right? So are you a good investor? People can see your on-chain record of how well you've done and what kind of investments you've made. And now you build an identity around that, right? That translates into loan protocols. It translates into a lot of very interesting groundbreaking ways of rethinking the way that we've done existing models to date. And so another evolution that we're seeing there, and this kind of plays into contrarian thesis, one space that we think there's a lot of, call it apathy towards right now, is the metaverse, but it's one that we're extremely excited about. We think that we have an internal view and kind of thematic thesis that the metaverse is simply an evolution of Web 2, right? You start to get a more visual, immersive world where now all of a sudden websites, and even in the website space, you've seen us go from the 1999 level website to very rich web apps, right? There's an increasing demand from consumers and users to have a better experience, and there's a lot of ways that being able to do that in a virtual space actually only improves, right? If you think about X, like in X spaces, right? That's become a very interesting way to communicate with people in a real world setting, but it's an improvement over the messaging, lo-fi version of what the platform supports. And so we think the metaverse in that context becomes a really compelling next stage of the internet, and also one that I think will translate into domains really well, because now you have a lot of these open worlds that people are going to need to know how to integrate and access. And some of the most interesting metaverse projects we've worked with and invested in actually allow you to experience these worlds without downloading any software from your computer or even your mobile phone, just simply by going to a URL. That URL drops you into a world that you can fully immerse in, and it looks very much like a website. And so in a way, we're just upgrading the Web 2 experience, and also with it, I think, creating an enormous explosion of what will be needed for digital space, for domain space, right? Because now you need to be able to tie a real world, easily monikered word to a space that is otherwise entirely digital.
And we have 5 minutes left, so I want to leave some room for some open Q&A, but my last question is, what are your predictions in 2025 with crypto and the new regime? Do you think it will take years for policy to come into play? Do you think it's the Wild West right now, right? Do you have any views on like ex-US geographies as well?
Yeah, absolutely. I think for the US, like the crypto policy that's already being put into play, even as of the last week, is extremely positive for the space. And this goes all the way from the executive branch even to the legislative. Like if you look at a lot of the initiatives Coinbase and a lot of the pro-crypto legislation proponents have put into place, there's a lot of representatives that got elected that have pro-crypto platforms. And so I think what we're going to see is much more useful legislation that actually works with companies, opposed to what we've seen in the past, which has been much more punitive of, we don't have a framework, we haven't given you a framework, but we're going to just punish people based on what we think. And that's a very, uncertainty like that kills innovation in a space, and it also kills the ability to take risk, especially from good actors, right? You actually allow, I think, bad actors to flourish in a space like that more, because good actors aren't given the capacity to actually know how to comply with the law. So I think the next few years, like we're going into kind of a crypto renaissance in many ways. There's a lot of things that are going to be rethought and rebuilt. A lot of areas where founders are now able and willing to take more risk and to innovate in a more interesting way. With that, I think everything from AI and the agentic economy is going to explode. We're going to see a lot of evolutions in the availability of physical infrastructure on digital rails. So yeah, I think 25 is going to be an exciting one for crypto.
And for the crowd who maybe will start taking payments in crypto, which ecosystem are you most bullish on? Bitcoin, Ethereum, Solana?
That's a good and a tough question. I think there's pros and cons to all of them. I think
Or Avalanche? You know?
yeah, absolutely. I think all of the beauty, and this is a thesis we've had for a long time, is cross-chain. I think we're starting to see the rails happen where it almost doesn't matter what ecosystem you're building on. Assets have the ability to go across all ecosystems. And I think same with payment chains for people that are going to be taking payment in crypto, you're not going to have to make that decision. So that's kind of the interesting thing that's happening with bridge technology and a lot of messaging protocols that are making cross-chain work a lot better.
Very cool. Any questions from the audience for Nathan? No one wants to know what domains he owns today? Any questions? Cool. Thank you so much, Nathan, for joining us. Appreciate it.
Thanks for having me, guys.